Welcome to Trading Nation. Let's talk about GE. This has been a disappointing couple of years, not just here for GE investors. The stock down big from its high of a number of years ago. Is it worth your money at all? David Seaburg with Cowen and Company, Stacey, Gilbert of Susquehanna. David, I know your team put out a note on GE, and it was, I mean, the sum of the parts valuation was a couple of bucks less than where the stock is now. I mean, how negative are you guys on GE?
I mean, pretty negative. I mean, basically, we downgraded the stock a couple days ago. I think we put a $19 price target, which was being very generous. Did a sum of the parts analysis, and they put it out this morning and basically came up with an $11 to $15 range based on that analysis. And it basically took into account, when he was looking at the enterprise value, some debt-like sort of expenses that affect the entire franchise. So at the end of the day, you know, 11, 15, I think 15 was the top end of one of three analyses that he did. And frankly, you know, you can make the argument there's no reason to break this company up, or there's no value in it. It's actually destruction of value. So we put a $19 price target on this stock as a generous price target. It probably trades, you know, well below there. We'll see what happens when they discuss, you know, next week. But ultimately, yeah, the stock's going a lot lower.
Yeah, you know, it's Stacey, Gilbert, at least according to Cowen, that's a classic value trap. It's gone down. You know, it's a big company. You think, oh, it must be cheap. Cowen obviously disagrees with that theory. What about Susquehanna?
Yeah, we actually don't cover it fundamentally, but sadly, I am one of those that has fallen into this value trap. I've owned it for years. It's one of those companies with the dividend yield and overwriting, and there are a lot of reasons that you could get excess yield from it. But to your point, it's a really difficult company to own and justify, particularly as it continues to go down. You almost fall into the prospect theory idea here of, well, you know, let me just hold on to my loser a little bit longer and sell out of my winners too quickly. A couple things I would say about this upcoming event, though. So the implied move using the options is around 5%. That's a big implied move for an analyst day. So this really is a big deal. The world is watching, trying to figure out exactly what's going to happen with GE. Are they going to basically be able to maintain any sort of positive EPS here? You're looking at $1 to $1.20 for 2018. Are they going to get $2 billion worth of cost cuts here? It's a really big thing, and probably more importantly to most investors who own GE is what's going to happen with that dividend. And when we look at the options kind of mid-market going out a year or so, you do see a dividend cut being implied. And that is likely to be announced. And if it is announced and it's something, let's say, greater than 50% or something less than 30%, that tends to be around the mid-market of what's being implied in that dividend cut, that's going to be pretty negative for the company. So I think that's one of the headlines that investors are going to focus on a lot, particularly those that like owning the company for the dividend. You cut that more than 50%, and that's going to definitely become a problem for some people who are owning it as well. Okay,
well, I'm sorry that you've been a holder of this name. It has been a very, they got into oil and gas at exactly the wrong time. I mean, that's the other thing here. But Stacey, hold on to your dream. Maybe not the stock. Maybe not the stock, but hold on to your dreams
until they cut the dividend.
Yeah, you can override it. You can somewhat offset it. If 19 is the level here, you can overwrite to somewhat offset some of that risk, even if it were to see 19
One
in
more to
2018.
David. David, there's been some suggestion if they cut the dividend, it's a good thing for the stock because everybody's already priced that in. What would you say to that argument?
Yeah, I mean, I don't know that it's priced in. I mean, I look at it and say, I think that people are expecting it to some extent, but I don't think it's fully priced in. It's going to take a lot to turn this ship. I mean, and the only weapon he does have right now, like Stacey alluded to, is just this cost-cutting setup, and it's going to take a tremendous amount. So time is just not on your side here. This is a long process. There's no reason to own this stock, especially in the face of a dividend cut. It's not going to pay you out anything.
Okay, a negative view there on GE, guys. Thank you, Stacey and David. Thank you both very much. And as always, folks, thank you for watching Trading Nation.
Hey there, thanks for checking out CNBC on YouTube. Be sure to subscribe to stay up to date on all of the day's biggest stories. You can also click on any of the videos around me to watch the latest from CNBC. Thanks for watching.